JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 11th of January 2021, guys. So yep, welcome everyone. Welcome to this Monday's afternoon session where we're gonna have a very quick look at the markets, a few of the charts, the usual stuff. Basically, as always, before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So I hope you can all see my screen and hear me, because as I understand there is a little bit of a technical issue in the morning because of the late video, kind of, because it was lagging a little bit. So I think the euro dollar got chopped off a little bit. So although the sound was coming through, but the video was struggling. So I do apologize for this, guys. But fortunately, I'm running these sessions right now from home. So yep. So due to the of course due to the corona issue. I hope you'll bear with me, guys. I mean, like I said, straight away apologies for any further, maybe any problems. If I'll see that this is continuing, if the problem persists, then, well, I mean, I'll probably refer to I'll change to pre-recording the videos first and then kind of uploading those, so these wouldn't be live sessions. But again, like I said, let's see how all this is going to run. For now, I'll continue as normal. So jumping into the charts, the first one I want to pick up here is the German DAX. I talked about this one, and basically here you can see that the there we go, jumping back into the chart. So you can see that the index is drifting back down today. So it drifted back below that 14,000 territory. Now this morning I talked about this one and I was saying that keep your eyes on that 14,000 level. So after the index managed to reach and hit this level here last week, this 14,131 zone, it is now back below this 13,907 territory. Now I mentioned this level to you guys this morning, what I was saying, that if we get a drop below it, then yep, we'll aim for the 13,795 territory or even below that. So as you can see, this is exactly what's happening right now. So we did get that drop below that 13,907, but the holdup occurred near this highest point of February, which is around the 13,795 level. So let's see how this is going to play out. If it continues to slide, and if we, for example, today we see the close below this February high, February of 2020 high, then of course, yes, there is a chance for this one to drift further south, especially if it also drops below that 21-day EMA shown here as the yellow line. But let's not get ahead of ourselves. First, let's see how this is going to play out in relation to the 13,795 level right here, which is the highest point of February of 2020. Now jumping into NASDAQ 100, and here the index of course last week did have a fantastic rally, did hit a new all-time high, kind of hitting the area, let me just grab this one very quickly right here, hitting the area near the 13,113 zone. I believe the cash index did hit a slightly higher level than that, but nevertheless, for now, guys, All eyes are going to be on this area, on this kind of all-time high near the 13,113 zone, and of course I'm going to keep an eye on this upside support line drawn from the low of the 10th of November, because we can see that, for example, right now the index is drifting lower. It is currently trading already below that 13,000 mark, so it's currently sitting around the 12,970 zone, but still above this upside line. However, if it starts dropping further below this and falls below the below this level here, the 12,950 territory marked by the high of the 4th of January, and then, like I said, breaks this upside line. Now that's where we could start maybe aiming for slightly lower areas. But again, for now, be very careful, be very cautious, and yep, let's see how this is going to play out near this upside line. If it starts breaking this upside line and then falls also below the 21-day EMA here on the daily chart, then yes, well, lower levels could be met, guys. But again, don't get me wrong, it doesn't mean that this could lead to a full strong reversal, a sharp sell-off. But for now, I'm gonna just aim for slightly lower areas. Now, jumping into silver, I haven't looked at silver for quite a while now, and basically, you can see that yep, silver is also drifting lower. It got hit last week as well, so it drifted below this 21-day EMA, and today, for example, it's testing the 100-day EMA here, shown as the green line, and yep, for now, it's acting as a nice area of support. You can see that it did the same thing here back in around mid and the first half of December, I would say. It also acted as a fantastic area of support, so let's see if it can continue doing that, because we can see that there is a history of this EMA kind of acting as a good support area. So in a way, don't get me wrong, what I could consider here is a potential rebound at some point back to the upside. However, this whole area between these EMAs, the 21-day EMA and the 100-day EMA, will be quite an interesting one. So what could happen here is, and let me just quickly draw this one on the chart, what could happen here could be that we might see a bit of a rebound from this 100-day EMA shown as the green line, a push higher, and maybe a struggle to stay above. We could see maybe a break back above this 21-day EMA, but if it struggles to stay above it, then yep, another slide here could be possible towards this 200-day EMA shown as the black line. So for now, I'm not drawing any kind of chart lines, I would say here. For now, I'm just gonna stick to these EMAs for now, just to see how this is going to work out. But again, it seems that it might do the trick here. If you want to keep an eye on some levels here, what you could do is keep your eyes on some of these right here. Let me just quickly grab this one on the chart. There we go. So for example, the 25 zone, roughly around here, that's something that you could keep an eye on. And yep, if let's say if it reverses higher, but even let's say fails to travel back above the 25 zone, then well, that could be a good indication for you guys as well. So you could kind of start maybe consider preparing for a larger decline. But let's not get ahead of ourselves. First, let's see how this is going to play out in relation to this 100-day EMA. If it drops straight away, if it falls below and closes below this this 100-day EMA straight away, then I'll aim for that 200 EMA earlier, because this is exactly what we could see something like this happening here, where for example here at the end of November, the commodity also stayed below the 100-day EMA and just continued to travel towards this 200-day EMA. So I'm considering something like that again, but only if we see the daily candle staying well below this 100-day EMA here shown as the green line. In terms of the upside, guys, if you're looking for some higher levels on this one, if you're willing to buy this one, well, I mean, you could keep an eye on this inside swing low here of the at 26.60 territory, marked by the inside swing low of the 6th of January, and a nice good push above it. Yep, could open the door towards some higher levels. For example, the current highest point of January near the 27.92, or even above that. But well, I mean, we need to see a push back above this 26.60 level first in order to consider the upside. Now jumping into Ripple. Now Ripple, of course, as you know, is struggling lately, and Ripple is the one to watch, I would say, for now, because although it is very attractive in terms of price in comparison to where it was just in the end of November and the beginning of December, but of course the whole SEC situation is not really working well here for this crypto. For now, what I'm gonna do here is excuse me, guys. What I'm going to do here for now is basically keep my eyes on this 0.37 zone here, as you can see. Last week and well, actually mainly last week, it did act as a nice area of resistance. So an exit push above it could open the door towards this this short-term tentative downside resistance line drawn from the high of the 24th of November. So in either way, guys, I mean, if it pushes higher, still, as long as it remains below this downside line, still any move higher could be considered as a temporary correction before another maybe possible leg of selling. But if you want to be a little bit more careful here, I would probably suggest to, let's say, wait for a violation of, as I mentioned before, this 0.37 territory, or for the downside, this 0.2126 area, roughly around here, guys, because as you can see, that's the low, the 23rd of December, and also it acted as a good area of support. Although we did get overshoots here, but still kind of the price, or sorry, the rate remained mainly above this area, above the 0.2126, or we can round it up towards the 0.2125 actually. So that little area here is also the one to watch. If we get another drop below this, now maybe yes, more sellers could start coming in here. But of course, as I said, guys, be very careful for now. It is very tricky in terms of, like I said, because of the whole kind of SEC situation. So continue observing this one, but also I would suggest to don't try to kind of, let's say, hold on to this for too long. If you want to speculate on it, you can, but always but remember, there could be some liquidity issues, and yep, that's why stay safe, guys, on this one. Like I said, it is quite attractive, but of course evaluate the risk as well that comes with it, because again, due to the current circumstances. Now, jumping into AUDUSD, so I haven't looked at this one for quite a while, but this morning I talked about AUDJPY, and I was saying that there is a possibility for this one to drift further south. And you can see today, yep, we're having a nice reversal here. The euro dollar is also drifting lower, but I'll pick up on that one in a moment. So here, after testing the area near the 0.7820 zone, the pair started drifting lower and is now aiming for its 21-day EMA here, shown as the yellow line. You can see that, for example, here on the 21st of December, it did act as a fantastic area of support. So now let's see if it can actually do the same trick again. But of course, what you should keep an eye on is the high of the 17th of December which is also the low of the 4th of January, and that level is roughly around the 0.7640 mark. So a drop below this, and if we see that daily candle staying below this area, guys, well, I mean, this could open the door towards lower areas. So we are at a very interesting spot. Also, like I said, this area here could be an interesting one. It seems that there is a good chance we might test this level, but be very careful then, because if it continues to provide support, we could see a nice rebound here. And well, if we do see a rebound from this, somewhere from around this area, the 0.7640, don't forget that we might end up getting, potentially, of course, we might end up getting a possible kind of head and shoulders pattern here. So we have our left shoulder already here, and we have our head. So let's see if we can actually form that potential kind of a right shoulder, and with the 0.7640 level being the neckline. But again, like I said, this is just a bit of speculation here. Let's see if this is going to work out or not. Nevertheless, in either way, guys, if it forms a head and shoulders, if it doesn't form a head and shoulders, still the same kind of idea remains, that in order to aim for or should I say, in order to get a little bit more excited with the downside, well, I would need to see that drop below that 0.7640 level right here. In terms of the upside, pretty straightforward. Push above the 0.7820 zone could do the trick for more buyers, because such a move here would confirm a forthcoming higher high. Now, jumping into USDJPY, quick update from this morning, and you can see that we are flirting still with this downside line drawn from the high of the 24th of March. So as I've mentioned to you guys this morning, that yes, a break of this downside line may kind of increase the chances for this pair to move higher. However, just to be a little bit more on the safe side, a push above the 104.76 level here could do the trick for more buyers. But if this downside line continues to provide, or should say, provide a hold up, well, I mean, maybe we're not really done with the downside, guys, yet, and we could see a nice reversal lower. So something for you to keep in mind and to consider. And then, of course, we could start looking at a potential move back towards the current lowest point of January, near the 102.59 level. USDJPY. So this one is a little bit more interesting. Let me just arrange these arrows here a little bit. Now, we are coming close to this, or should I say, we came already close to this 0.8919 level, which, as you can see, continues to provide decent resistance. Let me just put this highlighted area right here. In order to get a little bit more excited with the upside, I need to see a nice good push above it, and I would like to see that daily candle staying above this area in order to, like I said, aim for some higher levels. But even then, if we do see something like that, still don't forget about this downside line drawn from the high of the 28th of September, which in a way, if remains intact, could still kind of send the pair back down. So in the very, very short term, there is a chance for this one to push higher, especially if it climbs above the 0.8919 level high. So this one is also an interesting one. First of all, let me just clear up the chart here. This is from last year. Now, overall, you can see that yes, the pair is moving higher. You can see that yes, we are struggling with this little territory right here. Actually, let me just put this one on chart. This 141.22 and actually also the 141.30. So let's actually round it up to closer to 30. So this whole area is providing decent resistance so far. We are still on an uptrend. We're still trading above, I think it's this one that I had on my chart here previously. So this upside support line drawn from the low the 22nd of September. So in a way, we can see that yes, the trend is still to the upside, although we are seeing a small little correction lower. So that's fine. We'll take that. Let's see how this is going to play out, because in order to aim for some higher levels, we need that push above this 141.30 zone. But for now, you can see that we are seeing a bit of a corrective move here lower, so which is fine as well. What you could do if you want to look at some lower levels, keep your eyes on this little area right here, this 139.48 territory, roughly around here. As you can see, it recently did provide decent support, and if we get a drop below it, then we'll aim for this upside support line for another test of it. But if it struggles, let's say, to drop below this, and if it rebounds, then we'll have ourselves just a nice little range here. So again, if you're looking for some downside, be very careful, because still we are above this 21-day EMA shown as the yellow line here, so there are a bunch of obstacles for the downside. But even for the upside, there are we cannot really talk about the upside until we get that push above the 141.30 level. So we need that clearance here. We need that daily candle staying above this area in order to aim for the highest point of September here, which is around the 142.72 level. And finally, EURUSD. So this is something that got chopped off in my morning analysis. I mean, the visual content was chopped off, but I hope you heard me. But basically what I was talking about this morning was that if we get a nice good further move below this 1.2210 zone, then yep, my next target here is the 1.2059 level right here, marked by the low of the 9th of December. So as you can see, at the moment everything's moving in the correct direction. We are still trading below this area right here, below this 21-day EMA, below the 1.2210 zone. But if you wanna, like I said, if you wanna kind of aim for some further declines, well, first of all, what you could do here, for example, is try not to maybe rush into anything yet. Now, at this point in time, probably keep an eye on it and where it's gonna end the day, because if it stays below this area, below this 1.2290 and this 21-day EMA, then yep, we might get a little retracement here, and maybe you could start jumping in somewhere around here. But again, always have your stop loss in place, guys. And here, for example, the stop loss could be maybe somewhere on today's high, because if it gets cleared, if today's high gets cleared, now probably we can scrap the downside scenario. For now, like I said, I'm leaning a little bit more towards the downside, especially if this daily candle here today remains below this 1.2290 and the 21-day EMA here. So guys, I hope you found it useful. I hope you didn't incur any kind of problems watching and listening to this video. And yep, so I hope everything kind of went well. Like I said, I do apologize for the morning video, because due to the current circumstances, unfortunately, guys, I have to run these videos, these sessions at home. So yeah, not maybe not my preferred location, but yeah, like I said, I will try to go through these as smoothly as possible. And yeah, guys, thank you very much for your patience. Thank you for your views, for your likes. I really appreciate that. And if you want to catch my video tomorrow morning, as always, my Traders Espresso, that's 7 o'clock GMT time. For now, I hope you have a wonderful evening, guys, and I'll see you later. Thank you very much, and bye-bye.